When I started trading 6 years ago, I always started from the lower time frame. It was more exciting, it felt like I could learn more, but I found out that this is actually wrong. Now, fast forward 6 years in advance, I always start from the higher time frame and do something called top down. Now, this is extremely important because the higher time frame is an instruction manual and the lower time frame reads that instruction manual and builds the higher time frame. Now, you need to understand how to use the higher time frame in order to trade the lower time frame. So in today's video, I'm going to break down exactly how I do top-down analysis and use the higher time frames in order to enter on lower time frames for a strategy that I've traded live on YouTube for over 3 years, showing every single trade from entry and exit and showing the success it has brought me. So that being said, let's get into this video. Here's the mistake that almost every single person makes, including myself, when we get into trading. We simply open a chart, we hop onto the lower time frame and start hunting for setups. This is simply wrong. Top-down analysis is going to save you, increase your win rate, and I'm going to break down the exact strategy that I use to execute from the higher time frame down into the lower time frame where my trades are actually taken. The problem is most of us don't make decisions with using the higher time frame and we end up getting lost on the lower time frame, reducing probabilities. I'm going to show you the exact strategy with an entry example to show you guys exactly how to execute on it. I personally have used top-down analysis every single day, traded it here in my live track record of every single trade. If you go in any one of these YouTube links to see the live trades, you will see in the beginning I start with a top-down analysis. This is game-changing and something that I could not trade without. It is simply the source I'm about to describe to you today is something that I could not trade without. So what I want you guys to do is actually start on the higher time frame. Think of the higher time frame like an instruction manual that the lower time frame follows, okay? And it's like opening Google Maps. We're searching for a location, but we don't know the city. Doesn't make sense logically. Market works the same. We even want to start up all the way from a monthly time frame here. Now, I know it sounds crazy, but we want to see what's going on from the monthly. Now, what's very important is to understand how you're going to mark support and resistance. So I'm going to have this drawn up. A resistance is basically when a bullish candle followed by a bearish candle closes, right? So we have a bullish candle close, then a bearish candle close, that creates a resistance. A support is the opposite. A bearish candle close followed by a bullish candle close creates the support, and we draw that on the candle bodies. I'll show you how to do that now when we go into the charts which are in front of us. So this is what creates a support and a resistance here, okay? I prefer 2 candles to be a better support and 2 bearish candles to be a better resistance, but 1 candle will technically count. We start from the monthly to know where we are. The biggest problem with when people do a top-down analysis and they start marking lines is they have 100 lines on the chart. We don't want that. We want most relevant, most recent. We are not going to be trading a whole monthly range today, right? You will trade it during the month, but we are not going to be trading all the way from down here to all the way up here, thousands and thousands of points in one day, right? It is very unlikely for, let's say on this asset, gold to move from 5,000 to 3,000 in one day, okay? So if we see support and resistances all the way down here, no need to mark them. Focus on current price. As you can see, it's fully green, which is part of the top-down analysis. What is monthly doing? If monthly is at resistance, meaning it's at a ceiling, that's not maybe a good idea that, hey, we might struggle to continue up this month, right? So we want to focus on what is happening on monthly. In this case, monthly is totally clean. We don't need to worry. Start to tell the story. We move down to weekly. Now see, this is where people get lost because they don't mark this. Remember what I said, bullish candle followed by a bearish, boom. This is relevant because we're not far off this. We're at 4966, this is 4989. This is important because if we hop onto a 15-minute time frame, we're not going to know that this is sitting there. So we mark this, and I like to label this as weekly resistance here like this. Now I'm going to explain to you, this is support and resistance, which I've explained before, but I want to explain to you the top-down analysis part of this. We do have to still mark up our chart, but I want to tell you how to analyze. So we start off, and this is for next week here on gold. So if you're watching this and you're trading gold next week, then enjoy, because this is going to be partly an analysis here as well, because we're doing the top-down analysis. So what we see here is we start to look at what's happened in the previous week, because this weekly candle will show us 1 week of data. So we can see the previous week came down to our previous structure here, right? We had our previous support here. That was a resistance. Resistance can be flip support like this, can be flip support, right? So a previous resistance can become support. And we came down, we tested that. Buyers came back in the market. Buyers took control again, bought that back up, flipping the weekly bullish. So even though we are at a resistance, at a ceiling here, we have had a lot of buying pressure during this week. So we know that during last week, we had heavy buying pressure. So going into this week, we have buyers more in control than sellers. So let's see if we can continue this theme as we go down the time frames, right? So now we go down to the daily. So I jump from weekly to daily. I also gonna mark my support and resistance here. So we can see this weekly resistance is also around a daily resistance here. I'm gonna put this right here like this so I know where that is. And our daily support would actually be down here. We technically don't have to mark this because this is a huge distance away. If we are focusing on trading right where we are, we don't need to mark things all the way down here. When price starts to come here, we can put it back in. But for the video, I just want to show you how to mark up as well. So I'm going to put this as DS for daily support. Look at the story. Daily time frame is now giving us bullish pressure. Sellers tried to take control the previous day, right? We had buyers come in. This is from the beginning of the week, 5 days of the week. Buyers came in first day of the week. Then we see the next day the buyers continue to come in. Buyers tried, they struggled a bit. Sellers took control, but the sellers failed at the daily support, right? That's why we need to mark. If we were trading on this day here, see this bearish candle, we need to be marking the daily support here and say, okay, sellers are taking control, but this is where they can stop. And that's why it's a top-down analysis, because they reach a ceiling. The same way now, buyers have come back into the market, but we're at this daily resistance here. So if we're going to fail from around here, because that is where our resistance. So the resistance and support is where price can fail. Between them, we can move smooth because there's nothing obstructing us. Once we get above 5100 basically, which you guys will see, we have clean shots up, right? If we can start to move here. But looking at daily, we have buyers in control right now, right? The buyers are controlled. So weekly told us that. Daily is telling us that. Starting to make more sense now. Now we move on to the 4-hour time frame and we see, wow, 4-hour time frame is at the same daily resistance here. If we can come and test this weekly resistance and get above it, we should continue bullish. As long as now we respect this previous 4-hour here, which we can see this 4 hours. So we still mark this because remember that concept I told you about, previous support can flip and become, this can be this resistance can now become support. So I meant to say previous resistance can become support. Same thing, this was a resistance that it was made, and you can see the next candle, look what the wick did, right? The wick came down, tested it, and used it as a protection level. So if we can do this, we will be able to continue up. Weekly supporting the upside, daily supporting the upside, 4 hours supporting the upside. The only problem is we're at this 4-hour resistance. If we didn't have the daily here, we would simply mark this here and write 4-hour resistance. So now we're starting to build a top-down analysis for a buy scenario here. For a buy scenario, we're starting to build the analysis here saying, hey, buys are going to make more sense. So I want to be a buyer going into next week until proven otherwise. How are we going to be proven otherwise? Sellers take control. We start to see 4 hours close bearish, dailies close bearish, breaks of structure, right? That is what a top-down analysis is, not a 1-minute break of structure, not a 5-minute break of structure. So for now, in this current market positioning on the lower time frames, when I trade the 15, 5, 30, right? That's my entries. I'm going to leave the first link in the description. Is going to be a video on exactly how I enter trade step by step. Otherwise, this will turn into like a 1-hour long video. I'm going to show you an entry here at the end of the video. So stay around to that. And if you've made it this far, leave a like and subscribe. I would appreciate that. We get up to 250 likes. I want to show you, right, how we can then move this into lower time frame, because when we're looking for the setups now, we can use what? Anything that's bearish movement that's happening, we can use that as opportunity to play the higher time frame buy idea. So if we move on to the 1-hour time frame here, we can see every pullback is being bought back up. So if we start to pull back and respect the same zone that we had, which you can see with my purple line, which is also a key level, which means an even number, we can use that as a buy opportunity. If not, check this out. We have clean buy options back into the weekly resistance. That's our next resistance. 1 hour clean, nothing there. 30-minute clean, nothing there. 15-minute, probably there'll be something, yeah, right here. So on a 15-minute, we have clean shot till here. So now we know daily supported buys, weekly supported buys, 4-hour supporting buys. Any pullbacks are being bought back up, which we knew that from the previous day. So even if I pull back, I'm not going to be bearish just yet, right? And there's a way to trade mixed buys where you can take sells in the session but understand the higher time buys, right? So this is all the layers we have in trading. You know, if you're interested in the layers, check out my channel and find out about that. Or if you want to learn directly from me, also possible to do those things, and those are the different layers and what makes trading so exciting. But this is a top-down analysis, guys. You have to be aware of what's going on higher time frame, because now the lower time frame becomes clear, because otherwise you're like, oh, should I sell here? We broke structure. Boom. Oh, I'm amazing sell. Shoop, straight to stop loss. Man, if you just press buy here, you would have been better off. Oh, price is rejecting now. That's it, done. I'm taking a sell. Shoop, straight to stop loss. And you don't, and higher time frame has told us all that story. We don't even have to worry about it. So going to next week, beginning of week, I'm bullish into gold until we see 4 hours close bearish and stuff like that. So let's jump straight into an example here of how we can use that analysis, and a very similar example of how accurate we can be. So here we have a similar scenario, price looking for buys here today. We have a 15 here, that's our current resistance. This is one of my breakout strategies I love to take here. This is gold as well. Here we have our daily resistance, which on this chart, we have an equivalent of the weekly resistance here. And you can see same close above, very similar setup. And then we have here a 4-hour resistance. And between that, everything is clean. We are clean. We have clean candles here, clean shot towards the upside. Check this out, beautiful. And that 4-hour resistance is also a 1-hour resistance. So my max target is gonna be these high time frame levels. I'm gonna use daily. If we reject of daily, I close my trade because that's where I'm trading to. If we can get above daily, I can target 4 hours. So what I'm gonna do is I'm gonna wait for a candle to close above here on a 15-minute time frame, which is a resistance. I always want to close above the resistance. You can check out my breakout strategy videos, and I'll take a buy, and I want to show you what's cool about this trade, how to manage it. So make sure to stay, because you'll learn some new stuff. Even if you know my breakout strategy, you have to stay to the end of the video, because you need to understand this is some golden sauce we're putting in here. So let's put some size on this. We want to be taking a buy stop here, breaking the high. Stop loss will go below the candle, right? And I'm going to show you how to manage. And our max target here is going to be that 4-hour resistance. That's our max target for today, right? And we're going to put a buy stop like that. Boom. Oh, I actually put 2 buy stops. My bad. Don't need to put 2 buy stops here. $500 risk, actually a little bit low. This is a 100K account, but that's fine. We're going to play these candles here. I'm going to show you how to manage the trade. So wait for bottom wick here. Let's see when we get triggered. So what I'm using to show you this is called Pip Labs here. This is a simulation. So boom, we tapped into that daily resistance here. Okay, so this is called Pip Labs. You guys can see it in the description if you want to practice as well. Very cool software. We're up $200, so almost a 1-to-1. So we basically tapped a 1-to-1 there, 46 pips, and we had a stop loss of 52. Since we're at daily resistance now, we can move our stop loss to BE, which means move our stop loss to entry, which means if we reject this, we're going to lose nothing, and we gave it a shot. I'm not closing the trade because I didn't hit that 1-to-1 at least minimum. But what we can do is we can start to trail. So we can see we reject it here, come very close, but we managed to maintain the buy bullish, right? We have the buyers still taking control. If we can close above the daily resistance, we should have a clean shot here. So now we can just let price do its thing. Hopefully it continues towards the upside. You see the beautiful volume coming in here, right? Like this. This is great. Massive breakout trade. You can start to trail this, but there's nothing even closing bearish. So the minute I see 115-minute candle closing bearish, lower time frame change of structure, I'll close out my trade, because now I'm running 1,000. I'm already at 1-to-2 here. Risk to reward. This is a very easy trade to trail. You won't always get this. 1-to-1 will be kind of a staple here on breakouts. But this is very easy to manage these type of trades. You just need to let it do its thing, and boom, smashes into our take profit there. We start to see it playing at the 4-hour resistance there, and look what will end up happening here is as we play into the 4-hour resistance, we fail to get above it. We test it again, second time, and let me skip a few 5-minute candles, and look what starts to happen from this target here. We start to boom, leave that target exactly, create the resistance around the 4-hour resistance. So that is how you target those higher time frame levels. If you didn't know that was there, you'd be maybe a buyer there, hopefully not. You lose your trade, or look where we came back to, man. We are back to entry. You would lose out risking $500 to make $2,000 in this type of position here, right? So this is would be very, very bad. And you need to practice this stuff. So hop on to something, practice daily, every day when you come to the charts. Simulate. It's a very good skill to use. And yeah, hopefully you guys simulate these type of things so you can get your reps in, get the practice in. If you'd like to learn more about my strategy or work with me directly, trade with me live in a group, you can check out the first link, watch the video, all information is there. I appreciate you guys staying to the end of the video. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.